Welcome back. My name is Nigel MrSchroeter, and today we are here to talk about yet again another Navy Federal topic. This is something that I was asked about, so I wanted to create a formal way to address this, and being as proper and respectful and professional with this talking about this topic. So please make sure that you like this video. If you like videos like this and you want to see more in the future, comment below, let me know your opinion, and let me know how you feel about this particular tactic, as well as share this out to others. So today we're going to be talking about the Navy Federal auto loan to personal loan trick, hack, whatever you want to call it. Basically, it's how you can turn a auto loan into a personal loan. Um, this is going to be purely for informational purposes and purely just to kind of clear up some misconceptions and really you know make this uh a easy to understand, video explaining what it is and why you should not be doing it. All right. So, as you guys can tell, my stance on this is that it is an unethical tactic um, because, like I talked about in my previous video about application loan fraud, anytime you go into a bank and your assumption is I'm going to do this or do that, and it's not the same thing that you're telling the banker that you're putting on that application, you are committing loan fraud. Now, the bank would have to prove that you intentionally did it in order to prosecute you on it, which is why a lot of the times it does not get prosecuted. However, it is a potential thing on the table. So let's go ahead and look at this process. So the basically what this process was Navy Federal will actually send you a check to purchase a car from a private seller rather than purchasing from a dealer. So basically, you can go out, you look at the car, they'll give you a free Carfax report, make sure that it's a car that they're willing to finance. Once you do that, they're going to talk to the owner. They're going to come up with the price for that vehicle. You're going to get the check from Navy Federal, give it to the owner of the vehicle, and then basically what this technique was you could take this check, give it to the owner of the vehicle, and then they cash the check out, and then basically turn around and hand you the money back. And the bank, without receiving the title for the vehicle, would then turn it into a personal loan, and you would be getting charged the interest of a personal loan. Well, for one, this is not a very good method anyway, because anyone who knows anything about car purchases knows that the reason you purchase a car with an auto loan is, for one, because it's going to build your auto FICO score in case you want to purchase a car in the future. For two, because it's a lower interest rate than a typical personal loan. And reason three being that you have collateral that you could potentially gain equity in the deal. Like right now, the car market's up, so you can actually gain equity in buying certain cars. So, by doing so and putting yourself in a situation where you have all this high interest, you're never going to be able to obtain equity in the car. But basically, the concept with this was you were never actually going to purchase the car. You were just going to take the money and going to take that money and do something else with it. Now, for one, I feel like it was unnecessary. It was an unnecessary tactic. Personally, I've gone to Navy Federal. I've gotten personal loans from them. I've gotten, $15,000 in personal loans from them before. It's not hard to get a personal loan from Navy Federal. They hand them out happily. You know, they're actually easier to get approved for than an auto loan with Navy Federal in a lot of instances. So for me, I didn't understand the purpose of going through all of that and going through all that application fraud when you could have just gone and got the personal loan to begin with. Um, the other thing is you're going through another individual, right? So say you give this person this check, right? Say y'all were trying to hit big and get, $30,000 or whatever it is. So you give this person a check. What happens if that person runs off with all that money? Now they've ran off with all that money and you have nothing securing you having a car because there was no written agreement because there was no real car. Therefore, now you're stuck paying back a personal loan with high interest on whatever amount of money it is that you just tried to run off from the bank with. And that person could have ran off free and clear with your money. Now, the next thing is your risk of, you don't have a risk of losing any assets that you acquire, with this deal. Um, According to the people that are teaching you this, because they're going to tell you, oh well, you're going to get the titles free and clear if you do take the money to purchase a vehicle, and if not, anything you purchase with that money is going to be yours. Well, what I will tell you is, if you don't make those payments on time, or if something occurs and you don't have that money, the bank will come at your other assets. So if you have another car, or if you have a house or anything else, the bank will come at those other assets and try to get their hand in the pie. That's how banks work. They're working in their own favor. They're working to make sure that they have their money. Yes, certain credit unions are going to look out for you as the consumer a little bit more than others, like Navy Federal. But when you start using these types of tactics and playing dirty and playing hardball, you can only expect the worst. So, as always, thank you guys for watching. Thank you guys for being supporters. Please go ahead and hit that like button if you haven't yet, and comment down below and let me know how you feel about this tactic, how you feel about this technique, because I really would, like to hear you all's opinions. As always, we'll see you guys in the next one.